Bookkeeping Basics for Small Business Owners. Create a new business account, set budget aside for tax, keep your records organized, and leave an audit trail. This video will highlight even more useful bookkeeping tips and terms that you should be aware of. Welcome to another episode of Plentii. Subscribe and hit the bell icon so you never miss out on any of our latest and greatest uploads. Don't miss out on this amazing offer. Click the link below to schedule a free 30-minute financial consultation with Plentii to answer any bookkeeping, accounting, and tax planning questions. Create a new business account. There's nothing worse than having to search through too many statements to find one small yet vital piece of financial business that you need. That can often be the case if you haven't split your personal and business funds, so they're always combined into one account and it's easy to lose track. By opening a new bank account, you can keep your personal finances and your business dealings separate, so there's never any confusion between the two. When it's time to do your books, you'll easily know where to find the financial information you need. Set budget aside for tax purposes. Rather than facing a major surprise when the tax man comes knocking, it's a good idea that you budget for tax as you go along, so you don't have to pay a big chunk at once. If you have a savings account or something similar, then it can be a good idea to set a little bit of your income aside so that you can easily pay off your tax bill with the peace of mind that you have money saved. Always keep your records organized. If it's always a hassle searching through one account where both personal and business funds are coming in, then cluttered records are going to bring you an even bigger headache when it comes to bookkeeping. With records in good shape and neatly organized, you know exactly what is stored where, so you save a lot of valuable time. If you're too busy and approaching tax deadlines, you'll be thankful that you took the time to keep your records nice and tidy so that you save time by knowing exactly where to look. Although, make sure you keep your records organized all the time, and not just as a one-off. Track your expenses. It can be difficult to track business expenses, but by using a business credit card, for example, you can make sure that all of your expenses are kept together and tracked. The easiest way of doing this is by categorizing your bills into types of expenses to make things a lot easier. An example can be car mileage. If you're driving long distances for meetings, then you can keep track of your mileage and log how far you've traveled and the costs that go with it. Accounts payable. Accounts payable is the account which is used to track all of the money that you owe to a third party, such as supply companies, banks, governments, or anyone you borrowed money from. An easy example to think about is a mortgage, as when you take one out, you sign a contract telling the bank you'll pay them over a period of time in installments. Accounts receivable. On the flip side, accounts receivable is the account that keeps track of all the money that third parties owe to you. Again, it can be customers, banks, companies, or anyone that purchased or borrowed from your business. Assets. Assets are simply all the things that you or your company owns to help you successfully run the business. It can range from cash, buildings, and land, right through to tools, vehicles, and furniture. Balance sheet. A balance sheet is a detailed report which breaks down the financial situation of your business. In this report, you'll find aspects such as assets, liabilities, and the capital of your business. The point of a balance sheet helps to show what your business owns and owes. Bookkeeping. Obviously, this is one that you need to know, or should already know. Bookkeeping is the recording of financial transactions on a day-to-day basis. It helps to make sure that records of individual financial transactions are accurate and up to date. Capital. This is simply the money or other assets that personally belong to you as the owner, and not the actual profit you generate from your business or self-employment. Cost of goods sold. This is another simple one, as it's simply all of the money you spend on products or services which you plan to sell to customers. Depreciation. Depreciation is when an asset loses value over time, which can happen through wear and tear, for example. The decreased value is what's measured as depreciation. Equity. Equity is all of the money you invest in the company as the owner, plus all the accumulated profits. As a small business owner, your equity is shown in a capital account. Expenses. This is all of the money that you spend to operate your business which isn't directly related to the sale of goods or services. General ledger. A general ledger account is an account you use to store, sort, and summarize all of your transactions. These accounts are arranged in the general ledger, which also features the balance sheet and the income statement. Income statement. This is the financial statement which presents a summary of your financial activity over a certain period of time. After working out the revenue earned, cost of goods sold, and the expenses, it works out your net profit or loss. Journals. Journals are the place bookkeepers store their records of daily transactions. For every active account you use, such as cash, accounts payable, and accounts receivable, you'll have separate journals for each one. Liabilities. Liabilities are basically all of the debts you owe. This can range from loans you've taken out to any unpaid bills you might have yet to pay. Payroll. If you have a small business and you have employees, then payroll is the way you pay your employees. It's a big part of bookkeeping and involves reporting a lot of payroll aspects to the government. This includes taxes that need to be paid on behalf of employees, compensation, and more. Revenue. Revenue is all of the money you collect in the process of selling your services and goods. There are even some companies that collect revenue in other ways, such as selling assets their business doesn't need. Trial balance. Trial balance is how you test to be sure your books are in balance before pulling together all of the key information for the financial reports and closing the books for the accounting period. And with that, we've reached the end of this video all about the bookkeeping basics for small business owners. If you enjoyed this video and found it interesting, don't forget to leave a like and subscribe for more content just like this.